Welcome to FinTech TV. One of the most prominent topics here at Digital Asset Summit 2026 has been tokenization. Now, the New York Stock Exchange and Securitize announced a partnership to move actual stocks onto the blockchain. And at the same time, BlackRock's Larry Fink saying tokenization could transform the plumbing of the world's financial system. Well, joining me live here in New York City is John D'Agostino, Head of Strategy for Coinbase Institutional and also board member for AMA. Well, thank you so much for joining me, John.
Remy, it's always a pleasure to be here.
Well, a lot going on in Q1 of 2026, but here we are at the Digital Asset Summit 2026 and a lot of announcements coming through. So first and foremost, what do you make of the announcement with Securitize and the New York Stock Exchange?
Yeah, so look, this conference is great. Congrats to Jason and the team for putting together an all-star event during a crypto winter, especially. Look, I was a little bit skeptical of the timeline a year ago. So I was asked, I think I was on the show, and I was said, look, having been an exchange executive before in traditional exchanges, these are battleships that take forever to turn around. And it took a decade for the NYMEX to go electric and digital, decades longer than it should have. And so a year ago, I was like, look, this is happening. Tokenization is absolutely the rails on which value will be traded and risk will be traded eventually. But this thing could take, decades to happen. I have been, I think, proven wrong. The pace of adoption is extraordinary. So, NASDAQ, nicely Securitize, NASDAQ announcing their partnership. Obviously, Coinbase is building the everything exchange, rapidly tokenizing, allowing for 24/7, 365 trading of virtually any asset. And I think, who knows exactly what the catalyst has been to exacerbate that, but once these exchanges start doing either parallel after hours trading, the best analogy I can give you is once a trader has the ability to hedge crude oil exposure at 2 a.m. on a Thursday or a Friday when there's an attack in the Middle East, they're never going to go back to waiting until markets opened. And the best analogy I have is we are never going to go back to waiting until the theaters tell us when we can see a movie now that we have streaming. And so the more exchanges that build that capability, the more after hours liquidity will build globally, and the less likely we are to ever go back to that old system.
Yeah. And you bring up an important point because all of us, we are paying attention to what's happening geopolitically, but the activity when it comes to digital assets and, as you mentioned, futures price action, right? There have been a lot of headlines breaking on the weekends, especially before U.S. equity markets open, or we've been watching oil futures on the weekends before the trading week commences here in the U.S. But given the comments by Larry Fink regarding tokenization, what does this tell you about the growth of the space?
Well, it tells me that the major players are heavily behind it. The issuers have to support it. It's very, very difficult to do something with someone's stock or derivative or equity if they're not a fan of that action. So, for example, pre-IPO private markets for tech companies, they exist, but they've always been challenging. Ultimately, because the tech companies themselves aren't huge fans of their employees gaining early liquidity, or at least historically weren't, and they fought against that for a while. You don't want that junior engineer who to get wealthy pre-IPO. You want them to be young and hungry and scrappy up until the IPO when they lose their motivation because now they've got liquidity. But we're seeing over time the companies start to get comfortable with this, see it as a competitive advantage to offer curated selective windows of pre-IPO liquidity. So that went from becoming a threat, from being a threat to being a strategic recruitment advantage. And now that they're on board with that, those markets can start to build. And, we have these wonderful derivative perp contracts as well, which kind of simulate futures contracts. Hyperliquid's been extraordinarily successful. Coinbase can offer them to non-U.S. investors for now, hopefully someday U.S. investors. The horse has left the barn about this stuff. And once people taste overnight 24/7 instantaneous liquidity, very, very difficult to get them to go back.
So we're watching activity 24/7 as it unfolds, but I do
or agents might be eventually.
Yeah, absolutely. So that is something that we are talking about here at Digital Asset Summit as well, the role of artificial intelligence and agentic commerce. So it'll be interesting to see how all of this unfolds. But before we get to that, I do want to get your take on what we're seeing in the nation's capital when it comes to regulation. So we've been hearing about potential progress and taking steps back when it comes to the Clarity Act. So how does all of this eventually shake out?
So I'm not a policy expert, but we have great ones at Coinbase. I will say I have never seen, so market structure, which clarity is market structure, is enormously impactful, broad, and expansive. We don't see them very often. But even something simpler like Genius was horse traded until the last moment. I mean, people now look at it and say, oh, it was wonderful, it passed bipartisan. But I remember when weeks before, days before it actually was passed, people were betting that it wouldn't pass. And there were all this consternation about, all the amendments. So it doesn't surprise me that we're here. I think the adults are at the table. Things are moving forward. We're fighting very, very strongly for the American consumer. At the end of the day, we want a bill that allows for competition around rewards and interest payments. It's very, very simple. You should not be getting 10 basis points when the issuing bank is getting 4 or 5% from the U.S. government. It's really simple. So the only way to drive that or shrink that spread is to allow for competition. So we hope that the final form of the bill allows for the American consumer to extract as much wealth as possible for themselves. But we are encouraged by the administration's dedication to getting this done.
Yeah, so John, you and I will continue to monitor what happens in terms of progress on this. But you mentioned one word, and that is betting. So if we're talking about betting and regulation, what do you make of prediction markets?
Well, I think prediction markets, as a whole writ large, I understand some people try to taint them with the overterm of betting. I think there are very, very different types of prediction markets. There's sports prediction markets, there are event prediction markets, but then there are like really impactful things like prediction markets on interest rates. And we saw an amazing report on Kalshi talking about how their prediction market on interest rate cuts or raises is more predictive, is better predictive than traditional surveys. So I have a soft spot for those types of prediction markets. I think there's, all these amazing, like EIA, Energy Information Authority, releases these really important numbers every month of how much natural gas we have in the ground or crude oil in storage. It'd be really wonderful to have prediction markets that can help people hedge against them being over or under those numbers. So the states and the federal government are going to kind of fight it out. Again, we have a dog in that fight, and we have an amazing legal team that's working on that. We'll see how that all turns out. I'll stick to what I know, which is the important economic indicator prediction markets are incredibly valuable. They're valuable from a hedging perspective, from a market participation perspective, but they're incredibly valuable from a data and information perspective. And I don't think it's long, and it's already happening in some markets, where the large global quant funds start thinking and using prediction market data over other traditional forms of data. And so, we want that. We want the source of that information to come from the US because it's very, very powerful.
Yeah, and finally, before I let you go, because you mentioned rates, and I know you spent time at the NYMEX, so I do want to get your take on where you think we are in this market cycle, given all the geopolitical concerns. We know that energy prices are elevated, and that is a concern for global central banks here. But, you and I, we don't have a crystal ball. We don't know what's going to happen. But big picture, what are your concerns? How is this going to play out?
A long time since I traded energy, but I saw a lot of friends who are very active in the market. And the one thing I was taught early in my career, which really hasn't changed, market structures changed, the way instruments, energy is traded changed to some degree. But one thing that hasn't changed that people tend to forget is crude oil is priced by the marginal unit of production. It's the marginal barrel. That's why you could uncover a quintillion barrels of oil under the crust of the earth or on an asteroid somewhere, and everyone will talk about it and write about it. It doesn't really matter in terms of the price, because all that matters is, can I get that ship to turn around and come to me to produce my widget, and how much am I willing to pay to do that? So that hurts us when the strait is closed, because the few ships that can get through get bid up and bid up and bid up. But I will say this, it has an equal effect on the opposite side. So, any day now we could see an opening of the strait, and you have all of those marginal units of production increase. I think it was Bernstein or Goldman wrote an article recently saying how there's been demand destruction because of rising crude oil prices. So very, very quickly, you could see excess marginal production or marginal availability versus short-term demand. And crude can drop really, really fast. So I am cautiously optimistic that if we can get a resolution around the strait, people will be surprised at how quickly the spot market changes.
Well, John, always great talking to you. Thank you so much for covering so much ground in terms of topic. I appreciate your perspective as well as your insights.
Anytime.
Thank you.